It's massively outperformed everything. It's the best performing asset in all recorded history. So it makes it very difficult to allocate any money in anything else. Your future self is getting poorer because assets are all about storing wealth for future deferred consumption. The advantages that your parents had are not available to you. You have money in a bank, it's not your money. If you're 65 years old, gold does a great job for you. If you're 35-year-old, you ain't gonna get anywhere. You have to gain wealth, not just protect wealth, because you don't have it when you're young. This is the best performing asset the world has ever seen. It is up 6 million%. We can make infinite amounts of anything digital. Everything digital almost goes to zero because you can make infinite amounts. That's a real problem in a digital world until the invention of blockchain, which creates digital scarcity. It's a mathematical way to create scarcity. Scarcity is the asset.
In his latest interview on the Impact Theory podcast, Raoul Pal discusses the challenges of wealth accumulation in the current economic landscape and the potential role of assets like gold and Bitcoin as hedges against currency debasement and inflation. Raoul explained that governments resort to printing money to manage debt, leading to currency devaluation over time. This currency debasement necessitates finding alternative assets to preserve wealth. However, traditional avenues for storing wealth, such as equities and real estate, are becoming increasingly expensive and less accessible, particularly for younger generations. This creates a substantial barrier to wealth accumulation for many people who are unable to buy properties at inflated prices. Although Raoul states that gold has historically served as a hedge against currency debasement, he questions its effectiveness in recent years due to its performance compared to other assets like Bitcoin. During this discussion, Raoul declares that he is not anti-gold, but strongly believes that Bitcoin is the best hedge against inflation. As always, if you're enjoying the content, please consider hitting the subscribe button and giving the video a thumbs up. Turning on notifications means you won't miss the next Bitcoin video. Now, without further ado, let's jump into the interview highlights.
Your future self is getting poorer because assets are all about storing wealth for future deferred consumption. But what's happening is you can't afford as much of that now. So there's no real way of getting up the ladder. The equity market is much more expensive. Your kind of percentage share of the S&P is so much less. So the advantages that your parents had are not available to you. So that's a problem for society overall, is this issue of debasement of currency. Your job is to find something that offsets it. The traditional way of doing it would have been gold. And against global debasement over time, it works. But the really strong debasement we've been having in recent years just hasn't done well enough. And we need to find, what is this hedge? What is the right way of doing this? You have money in a bank, it's not your money, it's actually the bank's money, and that's been proven time and time again. Bank bail-ins in Europe were particularly bad. So we've got a broken financial system, and the blockchain rails are something that's actually very useful. We can figure out who owns what at any point with instant settlement. So it reduces a lot of the risk of the settlement layer. There's a limited supply, and it has the properties somewhat of digital gold. And that's worked very well. If you look at that, because you've got this technology adoption of the blockchain, plus this store of value or this collateral layer, it's massively outperformed everything. We have enormous drawdowns, monstrous, and still it's the best performing asset in all recorded history, almost on any time horizon. So it makes it very difficult to allocate any money in anything else. When you've got technology plus gold, call it that as a narrative, you're always going to do better. If you're 65 years old, gold does a great job for you. If you're 35-year-old, you ain't going to get anywhere. You have to gain wealth, not just protect wealth, because you don't have it when you're young. And that's the difference here, is there's a suitability factor for different types of people. Still, gold is a very physical asset, and to move it around the world is difficult. So you're moving claims around the world, even on blockchain. If I transfer you a Bitcoin, it goes straight into your ledger wallet, let's say, and you own it. It's yours, it's self-custody. In a world of 8 billion people where we live on the internet, We've memed $1 trillion currency into existence. We've memed it. It's just human narrative. But guess what? So's gold. So's everything that we do. What share of gold usage, of gold that's mined, is actually used in manufacturing? 7.5% to 10% of gold supply every year is used for use. So 90% is memetics to 92.5%. It's we believe it to be so. So that is an element of humanity. Memetics rule the entire way that humans understand the world around them. And because we believe something to be true, it is true to us. So we believe that this digital asset that is scarce is valuable. There are other blockchains that are much more effective. They're not currencies, and this confusion over there's all these cryptocurrencies, they're all competing against Bitcoin. They're not. These are networks where you own a tokenized part of a network, and the network generates fees, you make money. It's like owning shares, essentially, but somewhat different. Bitcoin itself, it has the sorts of properties that we as humans think of as holding value, as does gold. Certain other things don't. Paper physically doesn't, right? In gold, well, when the price is high enough, the gold price becomes cyclical because the miners will find new ways of getting gold out of the ground. And so supply adjusts and brings down price, which is fine. In Bitcoin, you can't do it. So it's really a function of demand in everything in Bitcoin. So it's the function of how many people believe this to be true, that this asset has value. This is the best performing asset the world has ever seen. It is up 6 million%. Every day is more digital than the last. Right? That is an endless trend that we are seeing. And in a digital world, we can make infinite amounts of anything digital. And we've seen that. So stuff like email has gone from being something we paid for to something that's free. Cloud compute, everything, compute itself is exponentially declining in cost because everything digital almost goes to zero because you can make infinite amounts. So that's a real problem in a digital world until the invention of blockchain, which creates digital scarcity. It's a mathematical way to create scarcity. So scarcity is the asset.
As Raoul points out, the emergence of blockchain technology offers new possibilities for wealth preservation. Bitcoin's limited supply and decentralized nature makes it an attractive alternative to traditional assets. In a digital world where goods and services can be replicated infinitely, digital scarcity, as provided by blockchain technology, becomes a valuable asset. The value of Bitcoin and blockchain technology is not only derived from its scarcity, but also from network effects and adoption. As more people participate in the network, its utility and value increase. Despite its volatility, Bitcoin presents a compelling investment opportunity due to its unprecedented risk-adjusted returns and potential for long-term value appreciation. The following clips underscore the changing dynamics of wealth preservation in the modern economy, the limitations of traditional assets like gold, and the potential of blockchain-based assets like Bitcoin to offer new avenues for wealth accumulation and preservation.
Scarcity is what we as humans value. And in a digital world where everything can be created infinitely, like food, in the physical world, what you need to maintain value is something. And that's what blockchain did. So that's why younger generations who live more in a digital world say, okay, this is great because I'm living in this digital world and I want it interchangeable with my physical world. And therefore, I'm happy that digital assets have value and I can think of Bitcoin as the foundational value layer for all of this. And that makes sense. The physical property here is actually the physical property of the blockchain itself. The reason this goes up so fast is not because of mania, it's because it's an adoption of a technology, it's Metcalfe's law. So what you're finding is networks, as they gain adoption, price gets a bit crazy. Now, in 20 years' time, will Bitcoin price be as crazy? Highly unlikely because it gets to maturity and it looks more like a mature asset. What Bitcoin's price is doing is saying, yes, there's the element of memetics. It has this scarce value. Nothing in the digital world has scarcity, so this is interesting for humanity. It's not proven, it's not had 1,000 years of history. It's interesting. It also has interesting properties in how it can reuse wasted energy or rebalance energy loads. Okay, that's interesting. But also, what is the future expected value of the blockchain itself? We would have said a year ago, well, Bitcoin blockchain is not very useful. But now we've started to see these ordinals and inscriptions, which is using the blockchain for other things. We're seeing other use cases of layer 2s built on Bitcoin. We don't know what the future of the Bitcoin blockchain is. But if enough money is attracted to it, it will create other use cases because it's a network with a lot of people on it. In a digital world, that's what's created all the value in Amazon, Google, Apple, Facebook. It's what's creating the value in Tesla. It's what the value is in ChatGPT. It's network effects. So we've got this incredible asset which has these scarce properties that solves a problem that we had in the digital world. It has some physical properties because what we can do with electricity and how it's mined. And then it has the future expected value of the network. Does it exist in 50 years' time, 100 years' time? I don't know. Nobody knows. Would humans use gold in 100 years' time? Nobody knows. Just because they used gold yesterday doesn't mean they use gold tomorrow. So everything changes. We're getting two elements here. We're getting the store of value plus the adoption of this technology that's driving it. And if I think it has investment properties that outperform other assets, of course I'll invest in it. Still the best risk-adjusted reward of any asset we've ever seen. The risk-adjusted return is alien. We have never seen anything like this. So regardless of what people say about the volatility, everything else, the risk-adjusted return is like an alien asset. We've never had anything like this. I just say this is the best macro opportunity of all time. We've got the best risk-adjusted return asset that has the highest performance of any asset in history.
So, there you have it. Raoul's comments highlight the challenges of wealth preservation in the current financial landscape and the potential of Bitcoin to provide a solution by offering a hedge against currency devaluation and leveraging the advantages of blockchain technology. He depicts a shifting landscape where traditional assets such as gold may be less effective at preserving and growing wealth compared to emerging digital assets like Bitcoin, which offer unique properties and investment opportunities in the evolving digital economy. Overall, his discussion highlights the emergence of Bitcoin as a disruptive force in wealth preservation, driven by its unique properties and the evolving financial landscape. If you'd like to watch the full Bitcoin versus gold debate between Raoul Pal and Peter Schiff, you can find the link in the video description. Hope you enjoyed the video. See you in the next one.